And when you hear the bell, you know for sure it is time to trade. Good evening. Many thanks for joining us. This is the Trading Bell. My name is O'Brien Kimani. We are coming to you from the trading floor of Nairobi Securities Exchange. Later on this program, I'll be talking to Abel Munda. He is the Managing Director of Liberty Life Assurance. We'll be discussing the dynamics changing the insurance industry. And of course, that market outlook with none other than our in-house analyst. This is something that you don't want to miss. Stay right here because you're watching the Trading Bell. Nice to meet you.
Nice to meet you too.
Please.
Yeah.
Take position. So thank you very much indeed for joining us here on the Trading Bell. I first of all want to hear from you, when you scan the environment that you operate in, what conclusions do you make?
Well, the environment that we operate in right now is, of course, as you know, is characterized by a lot of electioneering and politicking, which to us, to a large extent, is disadvantageous because of it redirects attention. And so people always want to wait or defer decisions until after the politicking. But looking at the economic side, we are seeing actually some good progress. There's a measure of economic growth, although when I talk to my salespeople, they tell me that in terms of people making decisions, it's a bit difficult. So it would seem as though the common person, the person on the ground, is still feeling a lot of, or having a lot of financial difficulties in spite of the fact that we are experiencing a measure of economic growth. So the question is, does it trickle down to the Wanjikus of this world? So because of that, we are seeing our sales remaining fairly flat. Although we are looking at different strategies to try and change this in terms of how we reach the potential market. What is our extended reach? What products do we have? And so we are looking at different distribution strategies. I think it's critical. What I have to mention is that in this day and age, when we look at how people are urbanizing, in the entire country, the level of urbanization is very high.
But Abel, I want to find out, don't you find it somehow paradoxical by the fact that when political noise increases, then business risks goes up as well. And so at this point, you would expect a lot of people, to take up general as well as life insurance product.
Yeah, I know that politicking brings with it a measure of anxiety. And so ordinarily people would want to cover their properties, particularly properties. And we see a measure of that. And also even we have terrorism products through our sister company, which is Heritage. So that we see that actually taking place. So if you have your business premises during times of politicking, obviously you would want to protect that. So we, as an organization and as a group, obviously we have our products which cover those kinds of risks, and we position them right, particularly at this time. There is a lot of value in someone taking up insurance cover for their properties. So if you have a house, if you have business premises, particularly the SMEs, in the industrial area or whichever town where you are. But it's also important that it doesn't just happen now. It should be always happening because risks are always there. Okay, but I know with the politicking, with the hate and politicking, the level of anxiety also goes up. So then you see people taking up a lot of insurance, particularly to cover those risks. Yeah.
And we know for sure that the 8th of August is fast approaching. What do you expect and what do you see pre and post the elections?
Okay, pre the elections, of course, we are seeing a lot of politicking. We've just gone through the nominations. I know some results have not even been announced. And so you see the attention is redirected, towards that. The good thing is that, the level of violence is not expected to be much, and that is good for the business community. I have to mention that. And our expectation, and we do appeal to our security organs to ensure that the elections, come and go without much measure of violence, because if there is violence, obviously it portrays us in bad light, even to potential investors. So as organization, as a company, we would like to see absolutely no violence. Then if that should be the case, what happens post the elections? If we go through the elections peacefully, I can tell you it will inspire a lot of confidence in the business community and even in the foreign direct investment. People who are looking at us as a potential market to come in, they are waiting, and they want to see how we go through the elections. And what then we expect to see. And I expect that the elections obviously will be peaceful, but when that happens, what then happens after, I think, is a heightened business activity.
Let's for a moment forget about vagaries of politics and now getting to the real business. 30% or even more of all the claims that you pay are considered to be fraud. This is indeed a serious risk to your business. How much, as a company, have you impacted by fraudulent claims?
I have to say that when you look at the two different sectors, because we have in the insurance industry, we have the general sector and we have the life sector. General sector does include medical, and I know medical has suffered quite a bit the risk of fraud, and they have taken the necessary mitigating measures to make sure that this risk is completely, very much reduced. You can't eliminate it.
You can't make the system foolproof.
Yeah, you can make it foolproof. But I think where they are headed is the right direction, because I'm seeing them introducing computerization and electronic proof or electronic systems extended to doctors, premises, and hospitals, so that the person you're treating is the person who is insured. You're treating the real insured, who is claiming. So the claim you are paying is a valid claim. Because that has been the problem. You may have situations where people would want to treat somebody else who is not insured. And if you don't have systems to eliminate that, then you just pay that claim. Now, that is a fraudulent claim. So in the area of medical, there has been that serious problem. Similarly, in the area of motor, there is also high risk of that. But the good thing is that as an industry, we are coming up with mitigating measures. And if you can look at the trend, I'm sure you'll see a trend that is going down. Having said that, on the life side, again, we have to protect against that. On the life side, the biggest fraud risk is somebody to fake death. You can fake death, come up with a death certificate. And we've had instances of
it has happened, of course, in the past.
So the question is, how do you validate the death certificate? We before we pay any claim, obviously we have to go through a validation process. We have to authenticate that death certificate before we pay it. So we find that this risk mitigation measures, this risk management measures that we have in place have tended to reduce very much the risk of fraud to a level that it is insignificant. Now I'm talking as Liberty Life.
Insignificant.
Yeah, it is insignificant for us.
It sounds very interesting. Do you then have to go and confirm that, yes, it's true O'Brien died and he was buried, for example?
Yes. Well, we may not necessarily need to go to that extent. But where we smell fraud, we have specialized fraud investigators who we work with. They are on our panel, so we send them. So if you fake death somewhere in Kakamega, Kisumu, or Mombasa, or wherever it is, and we smell, that situation, because what happens is that when somebody wants to defraud you, first of all, the claim material, or the materials that we require for claims will almost be like perfect. They'll just put them 1, 2, 3, just as you need them. A genuine claim normally is not that perfect. There's always be this missing, that missing. So we have to come back to you. There's communication going on. So when you find, first of all, somebody bringing to you a hoard of documents that is just as you want them, then that triggers, first of all.
They are red flags.
Yeah, they are red flags. So then we go through the documents one by one, one by one. And if we see that there is a potential fraud here, then we engage our fraud investigators. They go there, and to tell you the truth, there are situations when they've gone there and they've even taken a picture of the guy, you know, partying in a pub. Or, you know, this is the guy who is supposedly dead, but the guy is alive and
tell
doing
me
his
this.
stuff.
Tell me this. I mean, when you look at your bottom line, how much has it been impacted by fraud, for example?
Now, to tell you the truth, for Liberty Life, fraud for us is a non-issue. We have dealt it is a non-issue because our risk mitigation measures, you know, work for us. Our risk management framework is actually quite tight. So fraud in terms of claims, we look at it as a non-issue. It is not a big risk for us.
It's not an ongoing concern.
Yeah, not an ongoing concern. But I know as an industry, it's a big challenge. It's a big challenge, and so as an industry, we must continue to employ mechanisms, or to implement mechanisms that will stem this risk. And we've gone a long way in terms of introducing, particularly computers, into the work environment. We've gone a long way in terms of KYC and obtaining all the necessary materials that you can always cross-check. So this will raise that red flag that there's a potential fraud here.
Let's talk about, you know, some habits within the industry and among the players themselves, you know, that are posing a major risk to the continued existence of the insurance industry. And I'm talking about undercutting, which is a big challenge, which is an ethical challenge to the industry. In your own opinion, how do you think this can be dealt with?
Indeed, undercutting is a serious problem. There's no question about that. It's a big problem in the general sector. It's a big problem in the life sector, particularly when you're looking at corporate accounts. The way Liberty handles this, I'll first of all talk about how the way we handle it. We are a very professional organization. We price properly. We have a pricing department and a fully fledged actuarial department that looks at the risks, assesses it, and rates it accordingly. We are not literally going to discount unnecessarily a premium rate when we don't have to, if it doesn't make any commercial sense. It must make commercial sense because the company should be there in future to offer solutions to the Kenyan public. If we'll be undercutting and just making losses and losses, sooner or later we become insolvent, and you know, there we go.
So how should it be handled, you know, from an industry perspective?
Well, I think from an industry perspective, we have an industry association, the Association of Kenya Insurers. The association is dealing with these matters. They're looking at the measures that we can take to rein in, you know, some of their players who probably are not playing ball, and it is. By and large, this is honestly through an industry association, because I think that when you look at people undercutting, sooner or later, and we are in a free market economy, we don't want to have a situation whereby we are setting prices, but we must rate in a sensible manner.
Sooner or later, you're likely to undercut yourself out of business.
Well, yeah, you know, you may want to do that because nobody is going to come and whip you because you didn't price properly. But you're putting your shareholders' value at risk when you do that.
Time is dashing quickly, but I want to find out from you, Abel. When you look at the product uptake or insurance uptake in this country, for quite a long time it has remained at about 2.9%. This, of course, is negligible in a country with a population of about 50 million people. What are the new mechanisms that you think we should employ in order for us to rev up these numbers?
I'll mention what we are doing at Liberty Life. We have a very well thought out strategy that should see us grow and acquire additional market share. But I'll tell you one thing. There is a lot of market out there that is untapped. The question is, how do we get to tap this market? You know, insurance as a product, by and large, you know, is never bought. People normally don't think about, okay, general insurance, you might have a car, you have to get general insurance, you know that.
It's mandatory.
Yeah, it's mandatory. But if you're talking about life insurance, you know, so people don't think about it. And so we always, this old adage that insurance is sold, life insurance is sold and not bought. But in this country, and I did mention the issue of urbanization earlier, as we urbanize, individualism sets in. those traditional support structures, they fall away. When now you are an individual, you need insurance. You need life insurance because that is the way you'll protect yourself and protect your savings.
Yep.
And secondly, particularly for the posterity and your children, you don't want to leave them in a mess when something should happen to you.
Yep.
And by extension, at Liberty Life, for example, we have very good products in the area of retirement savings because you also must save for your retirement. I think days are gone when you can rely on your kids as your pension, you know, or to provide for your pension needs. Those days are gone. So it is important that you start, and you start early, because to enjoy the power of compounding, you need to start saving for your retirement very early.
So for you, the strategy is innovation and new products. As we wind up, I want to hear from you in 30 seconds. Where do you see the future of underwriting in the next 5 to 10 years? Abel.
I think honestly, sense will prevail, and I'm already beginning to see that. As a member of ACI, and given the forums that we have at ACI, I'm beginning to see that sense is prevailing. And you can see that in the recent past, we've not had insurance companies collapsing like we are in the past. So at least in the last 5 or so years, I know before there were cases where a number of companies did collapse. And what actually did cause that is what we are talking about now, the issue of, let's say, undercutting, and then you are not able to sustain yourself commercially.
And ethical market practices. Exactly.
So as an industry, we are addressing that, and it is going. But as Liberty Life, I can tell you, we operate on very professional footing. We have very robust risk management framework, and we must and will continue to price sensibly in a way that the business we undertake or we take in is commercially viable for us.
Abel, thank you very much. Without undercutting you, I must cut you in the interest of time. Thank you very much for your time.
Thank you.
Appreciate it.
Thank you so much.
Thank you very much. Abel Munda is Managing Director of Liberty Life Insurance, joining us here on the Trading Bell to help us understand where the underwriting business is going. This is the Trading Bell. Stay right here. We'll be back. Good. There you have the figures of how the market performed for the last 1 week. Edwin, too, is a senior analyst at Dye & Blair, joining us here, of course, to help us this figure into perspective. Edwin, thank you very much indeed for joining us. When I look at all the 4 indices of the market, they have appreciated. What is the reason behind this? Is it built on enduring principles?
We are still in what I call the earnings season. Just last month we had most of the banks reporting, and we've just seen Safaricom report, and we do expect Centum to report. And at the same time, we are in the pre-dividend season, where you go into stocks because in the next 1 month they're going to be paying out dividends. So that's the main reason that is pushing up the prices and pushing up the market indices as well. But 2%, 1% is still relatively marginal. So it cannot be taken to imply anything of a fundamental shift. Yeah.
And now we are about 3 months to the elections. Do we expect these figures to remain the way they are? Do we expect a bit of depression or appreciation? We
would expect the market to remain relatively flat. So up 1%, down 1% week on week. But it's definitely going to depend on what politicians do, because that's the major sort of risk out there. So if we see a bit more agreement, if you see a bit less controversy, then the market may, keep going up 2% week on week. Yep.
When we look at the top gainers, and I'm very much interested with Marshalls East Africa, we saw the shareholders, giving the management the go-ahead to delist from the Nairobi Securities Exchange after being there for many decades. What is driving their appreciation of 15.59%?
Well, the delisting price is actually set at 10.75. So it's sort of almost natural that within this period, before they actually go off the market, the price is going to go up to 10.75. I believe that is the price as of today.
Yeah. So do we expect it to move further before they finally finish the process of delisting?
No, it's not likely to go any further because the process of delisting, the process of now selling those shares to the entity that is taking over is set at a maximum of 10.75%. Yeah, so there's no higher. Yeah. And there's also no lower. Yeah.
And for Centum in East Africa, what story is behind the 12.59% improvement?
We are expecting their results for the full year coming up very soon. And that would be the key reason. We are sure they are most likely working on compiling the numbers right now. We've seen just in the recent past they have completed a divestment out of Kenya Wines, which earned them about 1 billion. So, historically we've seen this company the last 2-3 years sort of get out of some investment, and that sort of ends up being part of the profit numbers they announce. So that's the expectation that they're going to be able to keep up with that. And as well, we've seen the launch of Two Rivers Mall. So far, we could argue that we still do not have much data to know how successful it is or will be. But from a branding perspective, it's certainly been very good for Centum because the biggest mall in East Africa, attracting large numbers of people every day. So from a branding perspective, it's very good for them, as well as from being able to showcase what the company can do.
Good. Yep. And when we scan the top losers chart, 3 companies have prominently featured this list. And we have East Africa, we have Mumias, and we have Home Africa. Do you see these charts changing anytime soon?
So I guess company by company, things will change. When you look at Mumias, the factory has been sort of closed for about 3 months now. They call it OCC, out of crop closure, which means now they get to take advantage of the current weather patterns to sort of be able to, make improvements in the factory ahead of the harvest season. So our expectation is that when it comes back, there'll be a change. But they are also still looking for more money, which probably indicates that they are still way out of problems. So it's a bit more of a speculative stock, I would say. Home Africa, we've seen them improve fundamentally in terms of loss. They recorded a lower loss than before. And we know they're out there trying to look for a strategic investor. So the very moment they get a strategic investor, the company will be good to go. Because then they'll be able to maybe complete their flagship project, MIGA. And that should be sort of good to create the kind of confidence that will be needed to see the market go back up.
Very well. Finally, if you are to scan the market, which stock should we watch in the next 1 week?
In the next 1 week, I'm looking at Cooperative Bank. And the reason is I do personally expect them to do very well in the first quarter results, coming out sometime next week, I believe. But at the same time, we know they gave a bonus, they gave a dividend, and all that is going to sort of attract people who are, picking and choosing between various banking stocks. So that's a stock that I will be looking into in the short term. But in the long term, I think most of the large caps are good to go.
Good. Yeah. Edwin, many thanks for joining us here. Edwin Chui is a senior market analyst at Dye & Blair, joining us here on the Trading Bell. Stay right here.
is one able to sell the shares, the Emakiba shares, midway before the 6 months are over?
You surely can trade your Emakiba bonds by dialing *889#, entering your PIN and picking the second option. But of course, that can only happen between 9 a.m. to 3 p.m. when the market is open.
Well, and with that, we come to the end of the Trading Bell for today and, of course, for this week. Many thanks indeed for joining us here. Your company is always appreciated. You can always get in touch with us. Our Facebook page is at the Trading Bell TV Show. Our Twitter page is at the Trading Bell. And, of course, my Twitter handle is at O'Brien Kimani. Our SMS line is 22162. Always remember to start with the word BIZ. That is B-I-Z. So we'll see you next week. Same time right here on KBC Channel 1. But for now, from the trading floor, we'll take you back to studio in Broadcasting House. Enjoy the rest of the programs.